We ready?
Yep.
Right.
3, 2, 1.
Hey, folks, welcome back to your Frederick Real Estate Update. I am Darren Aher with RE/MAX Results, bringing you over 23 years experience in the Maryland and PA region. And I have with me once again from Presidential Bank Mortgage, one of the best loan officers you're ever going to meet in your whole life, Mr.
Terry Kernan.
Hey, buddy.
How we doing?
Oh, we're doing great.
I'm good.
We're getting through the summer a little bit more now, aren't we?
Yes, we are.
All right. We're not going to share any inventory this week. We're doing a recording. We are staying up on the hottest news and topics to utilize our time the best we can to bring the subjects that you are definitely wanting to know about, and also to know and understand what the things that to pay attention to, really, that are the hot topics. And that's pretty much what we're covering, is really big issues and ideas and things like that you don't want to be blindsided with. So, Terry, real quick, we're still doing our $100 giveaway in this summer for Sheetz gas gift card type thing here to relieve the gas pain, even though gas prices are coming down little by little by little. But we still know that this will be a blessing to somebody out there. And you have to let us know, when do you think interest rates will be at 6.25% according to the Mortgage News Daily app? Conventional loan, 30-year fixed. When will it get to that? And as you know, we've been hovering around 6.5 and a little bit above. And that's going to happen. We're putting all the faith in this. And that's our big giveaway this summer, to give somebody that. All right, Terry, let's get right on into it. Mortgage World. We've been kind of discussing off record and hearing from people, what are the big things you're experiencing? What are the big concerns right now, and things and big ideas to pay attention to when it comes to getting a mortgage? We talked a little bit about, holy cow, the credit card debt, more HELOC loans and other things. It doesn't feel and it doesn't seem catastrophic because life is still going on. People are still spending. It just seems like I was, sharing with you how I have clients that sell cars and they're like having their best months. And I have a client that's moving from Wisconsin in Bloomfield right here on the 55 North community off of Route 15. If you've driven past that in the last few weeks, it's unbelievable. There's literally at least 40 homes being built at the exact same time. That's unbelievable. It's unreal. And my client, who's coming from Wisconsin, looked around and saw them all, because I sent pictures, and said, "You are right. This is not Photoshop. This is unbelievable." And I said, "Yeah, yours is one of them." And the key thing is, Terry, not only are they selling them like hotcakes over there, right? Not only are the prices going through the roof, most of these buyers are paying cash. These are cash deals, most of them. It's just an unbelievable thing. So when you listen to national news or national podcasts or national programs about real estate and all these other things, you have to be really careful about the clickbait stuff that are doomsdayers saying that the whole sky and the whole world's falling, because in certain areas, it's really not. And it feels like it in a weird sentiment way. But in reality, there's still a lot of people selling and buying homes as a general rule. Now, the numbers are not as high as we'd like to see, and we have hit all-time lows. And we are I hear people say, we're grinding across the bottom. Yeah, in some markets, some areas, and some things, it's challenging. But in other areas, it's 100% makes no sense at all. And that's where you scratch your head and say, it's all specific to the seller. It's all specific to the buyer. All depends on what your goals are, what you're trying to do, and where and how and when. And those are the factors that can get very, very specific. So what are your thoughts on that?
So you're right. There is a lot of people out there spending money. But my biggest concern, and I talked about this a month ago on this very program, was my concern is people are buying things because nobody is telling them no. The credit card companies are increasing their ability to spend. So part of me feels, much like you just said, is really something. Are people preparing for a little bit of a correction in the market? Are people preparing for a little bit of a reset in the stock market? We're at unbelievable numbers right now, and we're seeing a lot of people pay cash for homes. They're taking the equity out of their current home, they're selling that home, and then they're taking the rest. If there is money, they're taking it out of the stock market. I'm seeing people buy things with money out of the stock market because you're not as taxed out of the stock market, because you're dealing with the base. But people are using their money now, and I think some people are cashing in because they're expecting, not hoping, keyword is not, but they're expecting that the market is going to take a little bit of a correction here.
Right.
So why not take the money that is inflated right now and use that as a correction tool? Now, we've talked about a month ago, we talked about credit card debt, $1.25 trillion in credit card debt. That number is only going up, up, up. But what are we also seeing? We're seeing more and more home equity lines.
Yeah.
Okay. Why are we seeing so many home equity lines and we're not seeing cash out refinances? Is because people are still protecting that 2.75%, 3% interest rate that they were given 4 or 5 years ago. During COVID, we saw incredible low rates. People are trying to hang on to that rate, trying to protect that rate as long as they possibly can. And time is running out. Why is time running out? Because people are getting more and more home equity lines. The home equity lines are running at about 6.25% interest only. So people are not paying down the home equity line. They're just using that, and that is not doing anything to help them further. The other thing that I had got into a conversation with one of our listeners, and he basically said, you talk about the national debt, but you don't hear any other politicians talking about the national debt. You don't hear about other people saying, hey, what about the national debt? I talk about the national debt, not every show, but I bring it up probably once every month to 2 months.
Yeah.
Nobody is addressing the $39.2 trillion that we have in national debt. Do you know that we are paying, let's just take last month, the month of May, we are paying $107 billion a month in interest payments on the debt that we have. 107 blows everything away. That number, and nobody wants to talk about it. Not one politician talks about it, because if they talk about it, they will get voted out.
Yeah,
because
no one's ever going to talk about this.
I'm not running for politics.
Right.
I can talk about it, but this is something that worries me. It has always worried me, and I feel that we're getting to the point of no return. So you look at a national debt, and you look at a country, and we have the largest national debt in the world.
Right.
We have the largest national debt by far. We $122,000 per person is what the debt comes out to be. But the one thing that they take a look at is the debt to gross domestic product. Okay, that ratio. The lower the ratio, the better. If it's under 100, it's not great, but the goal is to get as close to zero as possible. There's some countries out there with that ratio being in the 20%, and ours is 123%.
Wow.
Now, is that the worst in the world? No, Japan comes in at 200%. So Japan's in a bad situation when it comes to their debt added to the, with the ratio of the GDP. But we're still in a bad area at 123%. So I'm bringing this up because I'm starting to see things where things are getting a little out of control with people spending. And I think part of it is because we are not saying no to the spenders. Now, I talked on the show a month ago. Who's doing all the spending? People from 40 years old and up.
Okay? Yeah.
People from 40 years old and up.
Spend that money.
Let's spend it now, because we're not taking it with us.
Let's go.
But they're running up credit, so I think it's going to put a drain on anybody that's trying to retire, because when you retire, having an amazing amount of debt, and now your income's going to get cut in half or whatever it is because you're retiring, that formula doesn't work.
Math doesn't math.
Yeah. So I'm very concerned in that area. I've always talked about it, but what we're taking a look at is we've got to figure it out. We got to start looking at, balancing a budget. Nobody's balanced a budget since the Clinton administration did it 8 times in a row.
Yeah, back in the early 90s.
Yeah. Yep. So it doesn't matter who's in office. It matters that nobody addresses it. Nobody cares about it. and nobody wants to talk about it. It's
Yeah.
kind of like the, well, I can't even go there.
Yeah, let's not go there.
Nobody talks about it.
Yeah, that's the biggest thing. And Terry, people say, well, how does this affect real estate? How does this feel? How does this affect interest rates and all the things that you guys always talk about? It does. It's just not immediate, but it does. I mean, the only way to balance a budget and states and all of it, you have to spend less. And if you don't spend less with the taxes or the money coming in, you have to do both. You can't just tax more, spend more. We know that's not working well. There has to be some pain. That's the bottom line for our personal budgets, our personal lives. You got to increase your income, or just flat out also it'll go faster if you spend less, make more, spend less, make more. And so this is something that the accountability factor on this stuff like that, it's just beknownst to me that we don't have this, that the federal national government doesn't have a mandate from the American people that says you have to balance the budget. And a lot of people say that sounds like a great idea. Yeah. Well, what happens if the politicians, right, and the powers that be, they don't want to stop spending, so they say, no problem, we'll balance it. We're just going to raise taxes like nobody's business to balance the budget. Now you've got outrage, and now they're going to get voted out of office because of that. So it's a big seesaw. It's very interesting, but how it affects real estate directly, Terry, is we all know that you can't keep using your home as an ATM machine, even though they to be able to keep lifestyle like this, because at some point, Terry, at what point, you said the word no. No one likes to hear the word no. It's like a child, right? You don't want to tell your kid no, but you have to sometimes do it. Here's the big thing I think about with real estate related when it comes to HELOC loans and the use to be able to use potentially the equity that's, shadow equity, because it's not real until you use it or take it or do it. So all of a sudden, at what point do the banks, what limits do they have where they simply say, no, you cannot continue to use your home as an ATM machine? What does that look like real quick? And then we're going to move on.
Right now, you can get up to, if you really, really look hard and take a look, you can get up to 100% of the value of your home on a home equity line.
Why not 80?
A lot, probably 90% of all lenders out there are only going to go as high as 80 or 85% on a home equity line. There are a couple that are saying, hey, we'll take it up to 100. We're okay with it.
It's a higher risk.
Oh, it's an incredibly higher risk.
Crazy risk.
And so until things starting to tighten, until credit starts to tighten, then people, it's kind of like you learn from what your mentors do. You learn from what your parents do. You learn from, and so I think as a whole, the American people, and I'm not talking world, this is America.
Yeah.
We see a government that spends money on anything that they want, and they never worry about the cost of anything. So why shouldn't I be able to do that as a citizen?
Right.
And I think that's the biggest thing, and it drives me nuts. And just because of my background in economics in this business, that's why I'm always talking about this national debt, and we got to do something about it. And it's not like let's come in and raise taxes and start paying it down. I'm just asking the Congress to start saying, hey, maybe we should get together as a group, break a little bread, and figure out how we as a group can balance a budget. So what? Not going to happen.
Yeah, I think over the years there's been a lot of attempts. I mean, God, we even saw
the last 30.
Yeah, not seriously, but I mean, we've only had a few times where they've come in and said, "Hey, we're cutting these programs, we're doing this," and then you get all the pushback from all these programs and things out there saying, "Hey, why us?" And even though it's reckless spending sometimes or excessive, who knows? I just know this: anytime you come in and say no, or you want to cut funding, somebody's going to be mad, and that's the big thing. It's not like there's a real big, you're always somebody going to be upset if they don't get what they want, and that sounds like real estate, Terry, which leads us into the next big thing is this. Okay, last week we talked, or before, we've been talking a little bit about the Tale of Two Transactions, tough ones and all that, and some of the elements that make that happen. And man, I thank God, Terry, that I'm not afraid of none of them. I've been able to work through the worst of the worst, whether they work or not. Not too many planes have crashed and burned on my watch, But I'll tell you what, it's definitely a lot more stressful, and it's like we're earning our keep. It's no doubt about it. There have been some transactions, Terry, that I just shake my head and say, okay, let's just pray the next one's not as crazy. I don't mind challenges, but here's one. I'm going to set up the scenario. It's a buyer.
Okay.
The buyer gets pre-approved. They're buying a house with less money. The home price that they're buying is less than they're qualified for. I mean, it's less. They have cushion. Like, they can go a lot higher, but they're not. And their credit's amazing. They're like 800 credit. They have amazing income, almost no debt whatsoever. And I mean, it's like, it's the loan that you are like, wow, these guys are
slam dunk.
Slam dunk. This is amazing. Like, this is automated underwriting. And like, this ain't going to have any big conditions maybe. And so on the lending side, it's great. There's just few challenges. It seems easy. It's so easy sometimes, Terry, you get nervous, think, oh, that shoe, what's the shoe that's going to drop? What's going to surprise us out there, right? But on our side as realtors, this is the one I would describe as, this is the buyer that says, oh, $800,000? Okay. I pull the comparables, I do the data research, I do the, and this is the buyer that says, okay, what do you think we should offer? All right, we've done our project, we've done our calculation on 9 yards. Yeah, we're going to come in at full price. We really want the house. We really want it. We're not going to ask for less. We really want the house. We see that it's worth it. We're afraid the stampede is coming, which it was. And they don't want to be it's an easier, not less challenging, only because there's no bidding wars. They're the only one bidding in the moment. That's a sweetheart kind of a situation for a buyer. Not so good for the seller, but the buyers are loving it. They're like, yes, no bidding wars. I don't have to get in a fist fight. I don't have to go with escalation clause and no appraisal gap. Like this one, appraisal gap. Okay, no big deal because the numbers look pretty good. So I tell the buyers, not a problem. If the sellers really want that, as long as it's within reason, like, no, I'm going to protect you. We're not going 100% here. Maybe $10,000 at most or something that's reasonable that you feel, what? Comfortable with. That's our job. All right. So it's good. It's still a very easy, good, less challenges. Then all of a sudden we do a home inspection. No big deal. Now it would be easier for the buyer if they waive the home inspection, much easier for them. I mean, more stressful for them, much easier for the seller. But let's just keep it pretty clean and good and easy. Regular home inspection, structural, pest, all these kind of things like that. We do it. Very little comes up. The house is in great shape, very well maintained. Thanks to the seller, it's in good shape. We don't have to worry about the roof being 15 or 20 years old and getting in a fight with the insurance company side and getting it certified or saying you have to have it, brand new roof or you can't get insurance on it. There's no big safety issues at all, nothing like that. The pest inspection passes, radon inspection passes. It's public. Oh, this is an easier one. There's no well and septic. Terry, it's easier. It's public water and sewer.
Easier.
Huh?
It's so much
easier. It's public water and public sewer. Like, what could happen with that? Although I have had buyers say to me, hey, I went on chat or I listened to my Uncle Bob. I love Bob. And they said, even though it's on public water or sewer, we should still have a sewer test done. We should have a camera test done to make sure it's not collapsing, because if there's a problem from the house to the sewer, we're responsible for it at the end of the day. That is true. Yeah, you would be responsible for it. And that can be very costly to dig up and get repaired. But if it's not backing up right now, chances are 9 out of 10 times, if it's not backing up on the seller now, it's probably okay. But it doesn't mean you can't do that. Doesn't mean you can't do that stuff. So all of a sudden, they're like, okay, we'll waive it. We're not going to do that. We're not doing a mold test. It doesn't look like we see mold anywhere, and you can only find out if it goes to a lab. And all that. So those are the big things. And let's go back to the home inspection, Terry. We do all the inspections they want, and that could be anything. It could be, if it has a fireplace, it's chimney one, a regular structural, mechanical home inspection, top to bottom, 3.5-hour home inspection. Guy comes in from the inspector, white gloves, and you know what? There's no such thing as a perfect home, but you know what an easy relative home inspection is, Terry? There's like 8 items, and they're all maintenance, like a little bit of peeling chip paint here, that wire, it needs grounded, or this needs a very simple, basic. And by the way, the house is like 25 years old.
Wow.
Yeah.
Okay.
Wow. Yeah. So it's all easy overall. It's very few challenges, very few to worry about. Now, here comes the best part, Terry, that makes it better. I get with my buyer and I say, okay, here's a home inspection report. There's these 8 items. What do y'all think about it? Here's your options. You can ask for everything to get fixed. You can ask for credit. You can ask for some credit. You can ask for reduced price. You can ask for all credit. And you know what? You can walk away from the whole deal.
So that is your right to be able to walk away
Yeah.
within the allotted amount of time, which is generally 1 week.
Yeah, generally 7 days. Yep.
7 days.
Yep.
So what you're saying, and I know the answer, but I'm trying to explain to people that are listening, because a lot of people feel that once they buy it, they own it, and you can get out of a contract within the 7-day time frame of your home inspection if there's something in the home inspection you just can't live with.
Right.
Correct. Okay.
Yes, that's correct.
Just
So,
making sure everybody knows.
Yeah. So this is a good one because, like, I give them all the options. Say, what do you guys think? They say, what would you do? I'm not buying the house. It's you. I'm giving you options. That's my job. You know, what I would do, what you do. If it's different, that's not a problem. That's not a big deal at all. I'm here to serve you. They said, okay, let us think about it overnight. Sounds pretty reasonable. We'll get back to you. They get back the next day. What do you think they said, Terry? No, we're not going to tick off the sellers. We're not going to nickel dime them. These are easy. These are relative to deal with, not a problem. So what happens? We're good. We're good. We're moving forward. So the HOA, they get the documents by Maryland law. They've got buyers have 5 days to review them. They go through the whole thing. I ask them, is there any concerns you have? I don't see a red flag. You're welcome to call the management company, the budgets, the bylaws, the rules, regulations, everything. Everything checks out pretty good. It's a pretty stable community, by the way. All of a sudden, guess what? They're not walking away based on that either, okay? Then here comes the fun part, Terry, a little bit back in your world. Ready? Seller's world real quick. No home to sell, no home to settle, no rent backs required, no none of it. They're offering buyer compensation, so the buyers don't have to worry about paying me any additional because there's a gap there. I mean, Terry, this is a really easy, good transaction. What do you think?
Perfect.
Oh, it gets better. Wait, hold on. They're putting down $200,000. They got great credit and jobs. I mentioned that. Did I fail to mention that, right? Then here's the better one, Terry. This is where I need to explain this. There's no value issues. There's no lender required repairs. It's conventional loan. We turn everything in. But they get this neat little thing that comes back. This is just a scenario. Waiver of appraisal.
Okay.
Terry, you can't make this stuff up. What could possibly go wrong? This is starting to become way too good to be true because, guys, let me tell you what. There are between 100 and 200 pieces of things that we as agents have to pay attention to, should pay attention to if you're really good, to make sure you represent your seller buyer in real time with stuff that is time sensitive, major financial implications, major implications with people making decisions in their life. I want to revert this big one to you because that's my list right there. Waiver of appraisal. Are you kidding me? What does that mean? How is that even possible?
So it's called a PIW, a property inspection waiver.
Okay.
And basically we upload a loan into an underwriting engine, and that underwriting engine is either from Freddie Mac
Okay.
or Fannie Mae.
Okay.
And they have names. DU, Desktop Underwriter, is Fannie Mae. LP, Loan Prospectors, for Freddie Mac. We upload your loan into our underwriting engine, and if the underwriting engine, so much goes on, if it feels that this loan is very, very strong and very, very, can't miss, slam dunk, whatever the case, and the property in their mind is at value. So the computer runs values of the property.
Mm-hmm.
They run value of the property. And if you get a property inspection waiver, that means we do not have to order an appraisal. Now, do you see it on every loan? No, they're hard to get. Especially Loan Prospector has made it a little tougher. So Freddie Mac has made it a little tougher to get a PIW. But what we're taking a look at is to get an appraisal of your waiver. Let me reverse that. A waiver of your appraisal.
Yep.
You basically need to be putting money down.
Yes.
You need to be a strong borrower, and the property needs to be well priced in
Yes.
in where we are. If a property is priced too high, the
Mhm.
computer recognizes that. But it also, if it prices it too low, the computer recognizes.
Yeah,
that.
flags. They have stop limits.
Yes. So that is a big key, and that doesn't happen. And there are sometimes when somebody's putting 40% down and they don't get a appraisal waiver, and they're like, why didn't we get and it's more the agents. Why didn't we get an appraisal waiver? We don't want to. And
Hey, I don't do that to you.
Hey, we can't change
control
the
it.
computer. But the other question is that people ask is, well, if LP didn't give it to you, can we upload to DU? The answer is yes. We look at both of them.
Okay. Yeah, thank you for going through that. That makes a lot of good sense, and it helps everybody out there to understand all these elements. So this one, gonna settle. What could possibly go wrong now? Does it mean it's easy? It's crazy forever? Not till the ink's dried, Terry. Anything can happen. I've told that to sellers. I had one this week. I've got 3, 4, 6 settlements I just had in the last month. And there is nothing ever perfect in ever, but there is a big difference between extremely challenging, extremely tough ones, takes more time, more thought, more negotiating, more all these things, more stress, more everything, versus one that doesn't have hardly any. And they ebb and flow, and it's all based on these things. But last thing I'll share in the program is we got a minute left, Terry. This one I just described, and this is an element. No, I'm not being any controversial to different homes, but this is not a $100,000 home. This is upwards of $1 million. Here's what I've learned in my 23 years, Terry, and it's the weirdest dynamic. The higher the price of the home, the less problems are typically within a transaction. The lower price homes, whatever that may be, okay, the more potential challenges and difficulties and things you have to work through. It is the weirdest phenomenon, but it never means that us as real estate agents, we avoid the low price homes and we make less money. We only want to do luxury and the big ones. No, it's not like that. I treat every client, every customer, whether it's a $5 house or a $10 million house or more, the same way, same process, same things we got to pay attention to, same level of service. And I know with loans, you do the exact same thing. So, hey guys, thank you guys so much again. Tuning in to your Frederick Real Estate Update. June is bye-bye. We're going into the 4th of July stuff now. And we appreciate you guys. Happy buying and selling. And we will see you next time on your Frederick Real Estate Update. Thank you guys.